Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Can I get a screen and audio check in YouTube? Morning, Marty. How we doing in YouTube? Hope we're doing all right. Hope you can hear me nice and clear. Thank you. Well, thanks everyone for visiting the Trader Lab today. I'm your host, Tom B. The stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that I've shared that traders can reverse engineer, fit them into their own fractal or time frame, their comfort, and use these structures or trades to discover and extract a statistical edge or a probability that favors the trader versus the other participants. The business of trading is a gaming business. It's not a let's be right business or let's get approval from the market or I know what's going to happen business. It's a random business. In fact, it's 100% random 100% of the time. I think the bigger obstacle, and I spent a lot of time on this on Friday, and that stream is available to all of you who are visiting. And if you haven't watched it, definitely dig it out. It's called Trader Holy Grail, Trading Holy Grail, ? And how close can you come? And I believe there is, of course, no Holy Grail. It doesn't exist. But what there is potential methodology that can help you understand not only the business of trading, but how the market works. Why does it do what it does? How you can get in alignment. This is the key to the business. And the thing is, we use whatever we can get our hands on, of course, to try to define that. And most of us turn to indicators because it's the easiest and it's the most common elements that are available in all of our software packages. And they all work randomly. I always call that Trader Groundhog Day because we're always trying to fix something. Even though we have winning trades, we are not necessarily going to become profitable traders. And that's really based more on the process and not understanding the business you're in and having a vetted trade plan that gives you an edge. Instead, you're playing a video game and you don't even know it. And you're also looking for certainty. And you probably don't understand why. So these are the things that I address in the Trader Lab. And the Trader Lab, there is no cost for it. You can use a link if you're visiting in YouTube, not only to access the Trader Lab. What is the Trader Lab? A community of like-minded traders who come together to leverage their collective experience. It is specifically about the business of trading and attempting to create sustainability. So you actually have your own business. Whether or not, of course, you can achieve that is really a function of you doing the work, and it is work. If you want to be a competitor, whether you're an athlete or a high performer in any profession, you're going to have to roll up your sleeves and go to work and then build a plan, which we can help you with in TraderLab in order to achieve specific goals. But there is no plug and play. There's no shortcut. If there was, we all would have taken it, and we'd all have ATMs in the basement. So I can assure you, most retail traders are just visiting, and they never get an ATM in the basement. And that doesn't mean you will either. But if you've been making the rounds, it's almost like playing the circuit. If you've been doing it and you keep waking up in the same place, Trader Groundhog Day, then you might want to take that experience, which I perceive as trapped equity, lost time, maybe lost dollars or assets, and convert it into yield. If you're waking up in the same place, you're not getting a yield. You're just feeding something that is not the solution, it is actually potentially part of the problem. And of course, your mileage may vary. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And if Bookmap support, if you are in the neighborhood, could you please post the link to the current contest that's going on? and is where you would just post screenshots of Bookmap and your structured trades. And if you post them, you can win 3 months of or $650 in value of Global Plus, and that includes data for either stocks or futures. And there's no cost to enter that. You don't have to register; just have to use hashtag bookmap.com hashtag blue jacket, and I don't have it in front of me, guys, so if you can just post that in the TraderLab approach, apologies for that, and also in YouTube. There is a contest, and if you missed, I don't have that right in front of me, but if you look at yesterday and all of the streams from last week, you can see a little tidbit in there about it, and don't miss out. Even if you're not a Bookmap subscriber, there's a free digital version of bookmap.com. You can download that and participate. I think that's pretty cool. Now let's get into, you all know, if you were following the stream on Friday, and you should watch that one. It's in the TraderLab and also out in YouTube land. It is really about, is there a trading holy grail? And of course there isn't. But if we might think there might be some tools that we can use that give us an edge, what is the holy grail of trading? It's actually statistics and probabilities. And statistics aren't guarantees. What they are probabilities. And you really need to change your mindset from being right and looking for the sure thing, where because we typically are going to try to solve for what the business is not. The business is not being right. It is not knowing. It is none of that. Yet our nature, primal wiring, directs us to try to have it. And that's only because of our wiring. It's not because of the business. So we need to separate what our psychological needs are from what the business you're trying to participate in. Most of us don't do that because we never get that far. We have a belief, and the belief is born out of primal wiring. That belief has nothing to do with the business. Now, if that, you may think, what am I talking about? Because I predict and I'm right a lot of the time. So yeah, of course, we all are. Everybody's right all the time. Even if you're a losing trader, you're still right. So the question is, it is not about being right. It is about understanding the business, and then understanding that this is a gaming business, and it's a business of randomness and statistical probabilities. It's gaming. It's like the casinos operate. So you think about how casinos work. They're not predicting the outcome of the next hand, but they are only playing games with an edge, and they still pay the gamblers. Now, that's the thought. This is called a microcomposite, and all it is intermediate time frame of RTH. And what this represents, now this is interesting. I'm going to show you a couple of things. This is the day before. This is Friday, and this is Thursday. What happened Thursday? We opened here. We found too high, no clue. And then we did the Acapulco cliff dive, and 35 was a key location. Now, I'm going to be sharing concepts with you in fractals. Now, what's a fractal? It's called time frame in your language. In mine, it is not, though RTH is a time frame in the sense of it has a fixed open and a close. That's the only element of time for me. I'm really looking at behavior in what this says. The language of the market is based on volume. The simple way to think of this is shopping. When you go to a store, if this was on sale on this day, we got our buyers here and we went up, and this price down here was too low. It's a retail price from the down day. If it's on sale and we close, and then the next RTH open, we come here, and now what was a retail price on this day is too low. We can buy it. And then we're looking for the stops over the shorts in here, and this retail price from this day. It's the high of the day and a little more. That's part of the thrill. Now, what happens after this day? This high volume, and I'm in fractals, moves up here to 63.70 at this point, I believe. Yes. And we open, we test this. Oh, it's on sale. Can't buy it here either. So you can't buy it there. You can't buy it there. We take out what? Buy stops here and additional buyers, and we come up to this level. Too high. Too low, right? So down, up, Now, yesterday, Friday, we opened out of balance. Balance represents our value. This yellow box is where 70% of the volume took place. What happened here? Too low, and the shorts start to cover. Now, the high volume from Thursday is at 70. And we open out of value. And what do we know about this? There's still shorts in here. So Friday's trade was open, get long, and you need to really watch Friday's stream because it outlines the supporting process for getting long. And then our target is the stops from these guys, and this is the primary target for yesterday, Friday. And then whatever happens after that is part of the thrill. Then what? This is the retail price, $14.75 from Friday. So what do we know here? Retail price here, 06, highest volume. What else do we know? Stops are under here and stops are under here. All right, that's lovely. We have a low volume area out at 91.5. Not so much. We'll see. And this is our value area. So the market could trade in here. It can go up and take out yesterday's high and the all-time high. It can do whatever. This is now we know, and now we also know we don't know. Let me just show you one other snapshot. It's the same thing, and I'm only going from swing high to swing low. This is also a micro composite. You'll notice the levels are in different places. 71 is the highest volume in this fractal. But where are my levels? 05 and 14. I'm just going to show you a little something. Where's my levels? 70, 05, and 14. 06 and 14. Same thing, okay? It's all horseshoes and hand grenades. I don't get hung up on being precise because guess what? There's no precision in this. So let's look at the current situation. Now let's talk about the open. Now this is all taking place, by the way, before the open. Now let's come back. This is pre-RTH, okay? So let's not look at these levels yet because these are current. We're going to look at the levels coming in. So let's hold on 1 second here. Got to get some levels off of Bookmap because they're current and we don't want that. We want nada. Now we may have switched to a short configuration, but it's very muddy. You know, you heard of Muddy Waters? He's a blues guitarist. You heard of him? Okay. You know, I'm in Chicago, so blues is a big deal here. So this is, let's look at our location. Now this is all prior. Now this is the ETH high. Pretty important. There's over almost a 95, 98% probability we take out either the ETH high or low. So that's number one. This is our micro composite volume point of control. Intermediate time frame, retail price. It's a target. This is Friday's naked volume point of control. I want to show you the tie-in. You got to see how this works. So I'm going to spend time. If you want to learn more specifics about this, come to TraderLab. 06, this is volume. So think about this like your big box store. This is the retail price. Now, what can happen here is the market can rotate around these and do mean reversion. As we go down in time frame, 14 is the retail price from Friday. We can do mean reversion. What can happen is I can find too high in the developing time frame related to yesterday or Friday, and if this is too low, I can rotate around it. And again, I don't know what it's going to do. You know, this is part of our thrill of randomness. And there's more. What else do I know? Is that too high? Well, where's our retail price? So this is the retail price from Friday. I can rotate around it. This is the highest volume price from the intermediate time frame. It might be a target. I can do this in here. Who knows? Value area high is where 70% of the volume took place on Friday. Below this, so value area. So I'm opening in a fair area and I'm anticipating what's called mean reversion. Now there's more. Really? Yeah. The ETH volume point of control, what does this represent? ETH is the last auction. In other words, too high, too low, whatever. There's too high in the ETH and too low is this. But I have this open. I have this open. What is the probability of getting here? You're going to ask me. The concept of this auction is that's the retail price from Friday. That's the intermediate time frame retail price. I'm above it, so it can be support. This is clueless, two-side, fair. This is like going to the store. And the last auction was the ETH. I have too high. I have yesterday's RTH high. Trend is up. Maybe we'll go there. Maybe we never will today. And the overnight volume point of control is the last retail price from the last auction. What's the probability? Ish, 82%. You see? So now I know, and value area high, about 72%. This, naked volume point of control, 68%. This, no clue. And either ETH high or low, about 98%. Now, these are statistics. They don't tell you which way the market's going to go. They tell you nothing, only probabilities. What are we in the business of? Gaming. How do I want to trade? In alignment with the condition of the market. What is the condition of the market? Too high? Too low? ETH low? Maybe too low? High probability here? Fair price there? Inside of value, scratch your head, retail price, ETH, too high, out of here, get through it, there, and up. That's what I know. I'm sticking to it. Now, any questions? This is prior to RTH open. This is TraderLab and what you would do before the open. It's called a trade plan. Then what do? You bring out your structured trades and you anticipate behavior. You're not playing a video game. You are in a strategic business of edge. Where's my edge? Well, that's what structured trades are. Is everybody with me so far? Is there sound? I think so. How we doing in YouTube? You guys hearing me okay? So, RTH open, helmet on. There's one other thing I want to show you, and I hope I can show it to you. This is something I do. I'm not saying it's a good idea. I'm just saying it's something. Let me see if I can find it. It was early on. Here. Let me show you this. I'm going to show you something. Now, this is a process I use. I'm not saying it's any good. It's just something. Now, I can't show you the icebergs and everything, but this is what, when you see buy delta going up here, those are buyers. Okay, we all agree. What is delta made out of? Market orders, initiators, and stops, which show up as delta as buyers. Okay, buy, stop, market order. Hey, thanks for playing. We'll send you a coupon. What happens here? Now, going up, hey, why not? Keep going. Who knows? Sellers get below the buyers here. This is a change in behavior. I want to show it to you. Where are my buyers? There, there, there. My sellers are there. This seller gets below here. This is now a suspect. I'm going to draw a line. Now look where I am. I'm going to show you something I do. I'm not saying it's a good idea. I'm just showing you things that I do. And you're going to go, well, that's nice. Why do you do this? Because it's a change in behavior. Now, at the time, I don't know it's going to be the ETH high. It's not my job. If I was trading ETH, this might be a short for me. But I'm outside of yesterday's high. So I know if I come out of yesterday's high and I don't get buying above it and I break back in, I can sell it if that's my plan. Or I do nothing. How about this? I do nothing because I don't know anything until hindsight. You know that? I know it. What else do I know? If my sellers are here, why didn't it go up? Sellers. Where's my buyers? Here. Why is the seller below the buyer? Because they were absorbed. If I come back and I get my buyers and my sellers are here, what happens here? Absorption. There's my sellers. Now, let's just remember this. What happens here? My sellers. Where are my sellers? Here, here. Where's my volume? Here. What is this? I'm not paying that. Shopping. Break low. Sellers, and I'm in the ETH. Look where I am. It's like 1 in the morning, 2 in the morning, my time. And I'm out of here. Okay. Now, this is all happening before the open.
Yes, buy, size 225.0. EPS fires at 6,417.75.
So my sellers are here, and I'm anticipating they might be up here. And I don't know, but it's a level. I'm not unconscious. Maybe delirious, but I'm not unconscious. So what do I want to do? Well, at 8:30 Central Time, this is RTH open. So what do I know? I know this was the retail price. So for me, I anticipate a couple of things. I'm going to show you. So and this is all posted in TraderLab. I am looking for longs. Now, and this is called mean reversion. And the joke in TraderLab is, yeah, it's mean. Why? Where's the outside? I don't know. So what do we know? Trend is up. Can we agree the higher time frame trend is up? How are we doing in YouTube? By the way, please give a like. So this is, now I'm going to show you an advanced concept. It's not a tradable concept. And if you come to TraderLab, what I'm going to suggest is, where do you start? Well, first of all, come to TraderLab. You start there. And then you watch the library of webinars. You participate. And you download all the documents, the glossary, so you start getting a handle on the language. I don't use indicators. What I found was the ultimate, quote, indicator is the participant behavior, not something that's, trailing and is random, because it's all random. Every indicator has winning trades. So you could have all the indicators you want. And most of us tend to put indicators together to make up for the deficiencies of each one. So does more give you more, or does more give you more randomness? For me, and I'm only going to talk about me, is I thought that I could create certainty, and I ended up building systems to create more, certainty. So more, quote, indicators or derivative indicators. And the result was always the same. Winning trades, not moving the boat in the right direction, even though winning weeks and all the rest of it. It was, what's the deal with this? So I went to optimization. You guys who are curve fitting are doing the same thing. I just did it better, or worse, depending on how you measure, how you quantify that. So let's look at this. So we're opening here, RTH open, and we're in value. So if I look at my context sheet, that is telling me the market is accepting this valuation from Friday. Well, there's the highest volume price, Friday, and now I'm looking at two-sided trade. So in the TraderLab, I'm thinking, well, the higher time frame is up. I think the smart thing might be to get long. Where, Tom, do you get long? This is a great question. Let's come back to what we know. In the ETH, I have this. So now I want to look. So right here, I have no trade. I post in TraderLab. I'm opening in this. This has a high probability to be checked. Is it too low? And what else do I know? What was too high? Overnight volume point of control. Good chance to get checked. Where am I trading primarily to? Outside to there, because now this is alignment. So I have to try to find an outside edge. And this, of course, is part of the thrill. Where is it? Let's watch. VPOC migration. This is advanced. Now, all I'm doing with this is if I'm opening in a balanced area, I'm not trading directionally per se. I'm trading rotationally. And I know if this is my retail price from Friday's RTH, that if I can come outside, I'm looking to come here and I'm looking to come there. So this is my first thing that I'm looking for. So all this is posted in the TraderLab, and whatever happens, happens. So let's look. And this, by the way, two-sided trade. And what do I always say? Patience. It doesn't matter if you don't have a way into this. This is the retail price. The quote rule, if you want to create it, and you create your own, not mine, is you don't trade in the middle. You have to wait it for outside for mean reversion. What does this tell us? When the VWAP and the VPOC are in alignment, we're not moving away, right? We're hanging out. Well, if we're hanging out, then we could do this kind of stuff. I don't want to trade this because this is called, you know, the old saying, chopped up. Why do we get chopped up in balance? Because we're in the middle. Well, in mean reversion, which is a specific behavior, you need to be trading outside. So what we know is fair price from Friday. I'm sticking here because if you don't understand something called context, you're going to have a problem. By the way, we all have a problem in the sense of randomness. That still exists. But if I'm in a random environment, do I need maybe to consider where I have an advantage versus disadvantage? If I trade here, I have a disadvantage because it could keep doing this. So I don't want this. If I think the trend is up, I got to try to get outside. And that's part of the thrill of mean reversion. So let's look at what I see. I have resting liquidity here. I'm going to throw a little something over this just in case we come back to it. And this is a key level down here. So what do I know? This, up. So I'm looking to go north. I'm looking for long. So I got to find a long. Where's my great question? Liquidity is here. I sell stops, okay? And what do I know from Friday? The market is long. So I think the market has a possibility of taking out yesterday's high. But the statistics, we might not take out yesterday's high. We may futz around. So where's my resting liquidity? It's right here. 10. Where did this come from? Let's come back in here. See if I can tell you where this came from. There's reason for all this. This is the first long, by the way. I want to show you this if I can find. I wanted to show you the origin of this stuff, but it comes in here. And it's above the ETH low, and it's above here. So I have nothing else here. I have this, I have settlement, I have value area low. What is my statistic for value area low? I know you're asking, so I got to tell you. And these are all available in TraderLab, and you got to vet them. More or less 55%, not high. But what do I know? This is the outside edge of this retail price. What else do I know? If I come here and I bounce off it, I can get long. If I come under it, I have to be going the other way. I have to be going from the other side. So this is why, watch. I'm going to show you the long. Now, again, this might not be your trade. This is more advanced because statistically, I've got this, but I got this. So when I'm coming down to liquidity, this is now specifically order flow. Now, subject to your experience and how much time you've been in TraderLab, you might be looking at this and your jaw's on the floor, and that's okay. just wouldn't be your trade. But let's look. What is our objective? Outside in, and our high probability is above us. So the first idea is here to here, because we're in balance, and then back to balance from the ETH. That's the first trade for me. I was speaking to one of our traders this morning who asked me, just to kind of visit with him. So I was narrating this for them. Because you got to practice. Let's look at structure. We don't know anything. What do we know? This. What happens here? What does this mean? This is limit order book. We've got somebody sitting out here with orders. Who might it be? Well, it might be icebergs or nobody. What happens here? They can pull and we fall down to the next location, which is here and here, or they interact. And let me show you something else. Now, this is a little advanced and a little weird. What I'm going to show you now is something I observed. Now, remember, I don't use any indicators, but I have learned something from that wonderful experience. That is something called divergence. If the market is going down and I have sell stops, this is the week longs getting carried out. Thanks for playing. They get a coupon to the buffet, and my liquidity is here. Why is the market going down? Well, let's assume they're sellers. But what else? Who are the sellers? Sell stops. I make a new low, and I have less sell stops. That's divergence 101. Is everybody tracking so far? So, if I see divergence and I don't know what's going to happen here, they are being absorbed, these sellers. Why isn't it going down? I'm running out. Let's look here. See the delta? Where's my sellers? Where's my sellers? What happens here? I see buy delta on the low. Very nuanced, okay? So I have buyers here. And I have buyers here, and I have buyers here. So what's too low? Right here. Let me show it to you. Now I'm in a fractal. Microstructure. I'm not saying you should do this because it's all clear in hindsight. I also have to work with hindsight because I don't know what's going to happen here. Where's the change in behavior? It's here. I'm above the last sellers, and I have my divergence. What is in here now? Let's go. This is called fractals, and it takes a lot of practice to recognize the behavior. Watch. Sellers are here. The volume is there. I break low. I don't get above the microstructure. Break low. I don't get above the microstructure. Break low. I don't get above the microstructure. This is fractals. Break low. The volume is here. I don't get above the microstructure. Break low. The volume is there and there. I don't get above the microstructure. Going to zero. Here. Break low. Microstructure. Going to zero. Divergence, liquidity. Take it out. Test it. Going lower. Take it this way. Test it, going. Here's your key place. This is key. Change. Going here. And when I say going, it's maybe. This is a long. This is the mean. And why might I take this trade? Trend is up, and I'm in balance. So it means outside in trading. I'm spending time because this is where you want to learn. Maybe structured trading. And let's talk about support. Suppose you're asleep at the switch like I am. I'm getting my coffee and I'm daydreaming about my pizza tonight. There's my trigger. If I'm very sharp, I enter here, 1 tick above, 3 ticks below. You got to vet this. If it does this and I get my sellers at the mid, where's my entry? It's here. 1 tick above, 3 ticks below. you don't get filled, you got to raise it. You'll get long here. Your call. Stop here, scale here, and then we're going for this. Last place, it was too high. Think of this like support, resistance, resistance. And why would I take a long? I know. You're probably asking me and myself the same question. And where's my support? Let's come back. You ready to lose your breakfast? What's this? Support. What comes back in the market? Let's look. This is trading with order flow and auction market theory using a volume profile. Where was my retail price? There. If it comes here, what might I do? You ask. What's this? What's that? A trigger. Where's my entry? Here. So I got support. There's that same guy. See all the pieces? My sellers are here. My buyers are here. No clue. Break high. Where's my support? It's here. Long to where? There. Second long trade. Now, you're either long and you're biting your nails, thinking you're going to get stopped out, or you have a trade management process. That's up to you. That's something you'll put together for yourself. Where am I trying to go? Here. Overnight volume point of control. Target. Then what? What do? We rotate. So what do I know? Too high. Price check in the big aisle. Where's my stops now? Let's come back. What do I know? This is not a strong low. If you're long and you're long, what's under here? Stops. What's my primary target in this leg? The here. On the button. It's a scale. It's whatever it is your plan tells you it is. I can't tell you. All I know is probabilities are, let me give you the probability. There's another one here. This is all statistics. They're available in the TraderLab, and you have to vet them. There's an 82%-ish probability of taking out yesterday's high or low. Question for this astute group of traders is, do you think we're taking yesterday's low out when the trend is up? Maybe. Or do you trade towards yesterday's high? Question. So why am I only taking longs today? I don't know. Why? It's my plan. Could it take out yesterday's low? Absolutely. Let's watch. Now, it's very important to be patient because what do we know? Here's what we know. We have shorts above here. They're having a wonderful time. We got longs under here. In balance, everybody gets equally abused. So if the market can't go up, what does the market do? And here's something to write down. If this is too low, then that. If I get through here, then what? Then that. If I don't get above there, then what? Rotation down. If I rotate down, what do I know? Stops are under here. If I get under there, where's my next trade? We have something called the IBF. It's a reversion trade. I'm only trading mean reversion. I was posting it all morning. Mean reversion, trend up, get long, unless your plan says get short, of course. So what do we do here? Let's look. Where's the fuel? It's right under here. What else do I know here? If I break this and I can get back above it and this high volume, I can get long. It's the IB low, ETH low. And where's my support in a higher fractal? 05, 04. So I already posted, get long. Now, there's yesterday's low. What do I know? It could do anything. My job is not to know. Since I can't, my job is to think about where's the fuel. If the market is long and I hit the overnight volume point of control, then I'm looking for this. And then I don't know. It's like, I wish I did. I don't. But let's look at what we see. This is an important level. I'm going to put a little box around it. Why? It was support. Old saying in trading, support becomes resistance. And This is a structured trade called the IBF. So if I'm coming outside, I'm looking to get long to squeeze the shorts out. I'm basically trading two sides. So I have buyers here. I get back above the IBIG. I have absorption here. That's why why didn't we go down? These sellers were absorbed. Let's keep looking. Where's my location? It's out here. Tricky. I break high. I'm now above this. This is an aggressive long if you can read it. If you can't read it, you have to wait for a rotation. Where's our rotation? It's here. Let's look at it. Now, some of this, guys, you're going to look at this and go, oh my God, it's not your trade. That's all. It doesn't matter. It's just sitting and waiting for your bus. Think of this like a bus. Where's my bus? So I don't have a bus here. Well, you don't get on the bus. You wait for the next bus. Not art. It's just random. So the buyers are here. This is important. Now, I was looking at this, and I'm looking at this as resistance. And my jaw, my teeth chatter. I'm going, do I sell this? Well, no, because this is a key level. I can't sell it. Now, if I got under this, I might have a different thought process. But I'm thinking long. Why? That's the trend. Trend is your friend kind of thing. I always say to developing traders, don't get cute. Put a stake in the ground, align with the dominant side, don't worry about the rest of it. Because if you can't trade with an advancing side, you have no business trading countertrend. And most traders, developing traders, are into the dopamine. They're not into the idea that let's create a sustainable business and what's the best way to do it. At least in my opinion, best way to do it is align with the advancing side, leave the other for trade management. So when I see a short, for me, for developing traders, I should say, that I, train or have when I was on the desk, I'd say just trade with the trend. This counter trend is trade management. You'll learn counter trend by managing your trades, not by flipping, because you might only get a short counter rotation and get squeezed. So if you're taking longs only in an uptrend, I think you might have a better shot. So let's say here you don't know whether it's coming or going. What you know is this here is a key location. If you're in TraderLab, you'd know that. And you also know ETH low had a high probability. So you got that. And what do we know about the ETH low? I had my buyers in the ETH obviously down here, and it made a pretty good low. What did I do? I picked the stops out. Look at that, 400, another roughly 100, another 100. So there's like 600, 700 stops. And I got my buyers. Now I'm delirious. I don't know, right? What do? I mean revert. So that tells me this is too low at the moment. So when I come back here, assuming I didn't get long here, let's assume I didn't. Now, what am I looking for? To come across the range. But what does it do for me? It comes back to the mean, and then it bounces. Now what do I have? I got structure here. My buyers are here. This right here. Sellers were here. Buyers took control and now have support here. See it? That's a trigger. There's an entry. So you have an entry here and there. And then you're looking to come across the range and squeeze out. Think about what balance is. There's buy stops here. There's buy stops here. There's buy stops above the high. There was sell stops under here. We got the sellers out. Thanks for playing. They get the coupon to the buffet. The buyers take control. I can get long there. I can get long there. And my stop goes under the low. That's it. Wow. And then you got yesterday's high. And this was our ETH high where we had our sellers. And you could be just doing your thing. This is not hard, right? You know what it is? It's random. And then the question becomes, how do you operate in randomness, right? So this is resistance, and there's your selling bergs. So this long, this, you could be done here. You could just take this trade and bang. Now, the other part of this is, let's look a little closer. So this is our resistance of ZTH high. Profit taking here, you have a sweep. You got the icebergs. This is just counter rotation. You could be done. Now, everybody's thinking, oh my God, it's going to take the all-time high. This is the RTH. This is the ETH all-time high. It might, and it might not. Do you know? Raise your hand. Do you know what it's going to do? Let me know what it's going to do. Because if you know what it's going to do, that's going to help me. What is it going to do? Anybody? I think the reality of this is that if we accept we don't know, that we're in a 100% random environment 100% of the time, and it's random for a lot of reasons. It's just random because it is, but you can get a tweet, a piece of news, somebody trips over to court at the CME, it doesn't matter. It's all the same. It's random. We also have CPI coming out tomorrow, which may or may not impact today. At some point it might, at least towards the end of the day. I mean, if we're up here someplace, you're going to get evening up. For those who want to get out of Dodge, I don't blame them. For me, the only way to go is long, and I have no interest in shorts unless there's a material change. My job as a trader is just to take my trades, ring the register based on statistical probabilities, and forget about it. It doesn't matter. What matters is not gambling, because you're in a random environment, and if your emotional state overtakes you, I call that hide. You know, the lunatic under the hood. Now let's look at some more structure here. I'm going to just take you into some microstructure. What we know here is we had our sellers here, and they got filleted. I'm going to put a little box around this because I want to remember what happened here. It's kind of material. Just a level. And there's more to it. But let me give you the more. I want to put the level out here. And why it might be material. And again, when I say it might, that's only maybe. Why might it be material? Because these guys got posed, and now this is potential support. If I come out here, this is a low volume zone, and that is created by this acceleration. It is not auctioned. So the market has and I'm going to use terms like tendency because random, write this down. The market is random. If it's random, it's really about it might do this, it might do that. Where might it do it? That's what the auction does for you. Let's speak the language together of the market now. Let's talk, as they say. This is a foreign language, right? Since I don't use indicators, what am I doing? Well, I'm just following the yellow brick road. I'm following the behavior of the participants. So, well, I'm sorry here. Let me get this out of here. Actually, hold on. I got a better way to do this. If you have questions, please post them. And I'll do my best. I can't see the chats easily. They're on different computer, different monitors. Please give a like if you're getting something out of this. So this is a low volume area. The market accelerated. It's not auctioned. An auction is the chop, chop, chop. All consolidations are auctions, and they happen in multiple time frames of fractals. So this is an area to observe. This is an area to observe. This is poorly auctioned. This is the outside edge. So the market could come out here to either there or there and do something to what? Mean reversion. Where is the mean? Right now it's here. If I take a long, I'm looking to do the same thing I was showing you down below, to come back here. But this is a testy area. So the outside edge, let's remember what we're doing. Mean reversion, and this is the primary structure traders ought to be working on. It's fractal, outside in to the highest volume. Potentially, not a recommendation, outside somewhere back to the highest volume. These are called distributions of volume. This is the auction. Oh, it's on sale, retail. And if this is too high, it's resistance and I can bounce off it. If I cross above it, I can go higher. What have I done? I've taken out yesterday's high. You could be done for the day, get back in your Barca lounger. It doesn't matter. If you feel you have to do something, and remember the term I just used, feel, that's FOMO, that's the lunatic. Oh, I got to get it. No, you don't. What you got to do is only take trades that give you an edge. The rest of this, maybe not your trade. If you have a vetted edge, it's up to you. What might happen here? This might be for a counter-trend trader, which you should not be. If you cannot trade with the trend and create sustainability and profitability, you'll put yourself out of business by trying to trade counter-trend. The counter-trend initially should be trade management. In other words, learn to recognize change. And if you're long, you might be out of this. And then you'd be looking for continuation longs only. Where's our locations? One is here. Not my trade. I wouldn't be interested. No range. This is like using a shoehorn. If it comes out here, now I got range because I cannot enter here. I can see where I might get behavior based on this. It's the same as this. But this to me is I got this below me, and I can easily come out in here and check this. Remember, this was too high. Now, if I break above it, I can test it from the other side in alignment with this, and I would look for a long here, not a recommendation, because if it keeps going, then I don't have a long. It's not mechanical. Where's our target? It's the high volume. It's up in here and here. These are the areas. And this one has about 250 more contracts, so that's the high volume. But where is my resistance? See the change? I broke low. Where did I break here? Broke low. This is too high. I can't do anything with this. I break here. I could be out of my long, and this is a subject to trade plan. Where does the long fail? It would have to get under here. So the long hasn't failed, but if I'm managing my trade, I might be out here, and I have to be okay with that. I mean, I have hit my primary target. See? Now, if it comes under here in this area, which is my high volume, is too low, I would be taking a reversion trade, same trade I took from down below, but in a fractal back to the high volume. Notice the liquidity coming in the book. Now we want to see what happens here. I hope it's making sense. So I can't take this, even though I see the structure, I just can't get in here with the range. So I have no trade, even though I can read it. So I'm always narrating if this, then that. If not, then what? If this is too high, if this, then that. To where? To there, to there. If it's not too low, then what? Then reversion back to the mean. If I can't get through the mean, and look what I got here, then what? Then back down again. So this trade for me, and I'm very patient, I don't care. I'm here not to take poor risk. I'm here to take intelligent risk. I'm not here to chase the market around. I'm here to let the other traders get run over. Yes. Why? Because where's their stops? Well, I know they're under there. And now I know there's going to be stops here. I know this is my high volume node, which is my reversion target. And if I don't get here, I can come out and do this. And then I'm going to look here. And if I get long in this area, and I don't know where or if, I'm coming here. That's the trade. It doesn't mean anything other than maybe. Maybe it'll do this, maybe it'll do that, maybe it'll keep going. Maybe I won't be on it. Maybe and emotionally I'm going to feel you shoulda. I was talking to someone this morning. I was talking to this trader about shoulda. We are trading here. We're not trading here. We are going to look at this. So I know if I come down here, this is a level for me for reversion long for continuation. It's also possible, which I'll never know, that the high of the day is in, right? Why might that be the case? I have a buy sweep, counter rotation. I'm below my buyers. I have a trigger, and there's no clue. There's buyers here. That's absorption. Buyers are above the sellers, going to the moon. What happens? Sellers take over again. This is resistance. That's why if I get long, and again, not for me, no range, I'm going here. At least is my objective, because it's the same mean reversion that was coming back here. It's the same mean reversion that was on the long side coming up there. It's the same mean reversion from out here back there to yesterday's high. It is all the same, but it's fractal. Is that making some sense? This is resistance now. See where it is? Are you guys tracking? Duzman is asking me for along with liquidity support, buyer volume bar is a good trigger. Well, for me, this is where I'd be looking, because what you have here is two distributions. This was balanced. See how symmetrical it is? When you break out of balance and you're above this level, it is saying potentially, and I got to say potentially, that this is too low and this is my outside edge. When we were getting long down here, this is the outside edge because the trend is up. So we're doing this to this to this, and it could come, go wherever. If I stay out here and this is the outside edge and nobody knows, remember the mean part of reversion trading is where's the outside? I mean, was it this? Is this your long? Or is this your long? Well, for me, this is not a long, even though structurally I see a long. I can't trade it. I don't have range, and I got this. If I get long, for me, it needs to be after we've gotten these. Now, where's the stops? Let's think about this a little bit. If you're long, your stop's either going to be under here, or there, or there. See? So when I'm thinking about this, I'm also thinking about where's the fuel. The fuel is the retail stops. Right now, they're under here. Now, I know about this, so I know this can act as support, okay? So I got resistance, I got support, and I have no idea. Not my job. Now, if I can't clear these sellers, or they pull, then they open the hatch and I can keep going. If not, then the longs in here get thrown under the bus, and then I'm going to come back here. And for me, I like to trade in the stops. It's one of my favorite things. Why? Because the market rotates. If the market gets long, the guys in here, the buyers, the weak retail traders are going to be trailing their stops. They're risk adverse. Aren't we all? Primal wiring. If I can't get through this, then what are these buyers going to do that are sitting up in here? They're going to get taken out potentially. If they get taken out, I want to see then, does the passive side, the icebergs, take the other side? And when these guys come out, I want to see what happens here. So the only trade I have, maybe, and it's not like mechanical at all, is this outside for reversion. And if this is as good as it can do, and that's as far out as we come, and then we make a new high, I don't have a trade. I'm just telling you, I just don't have a trade. And I'm okay with that. because I'm really risk adverse. My thing is, I'm not here to gamble. I'm here to look for edge. For me, edge happens when the other side gets trapped. It gives me what I call fuel. Right now, the longs are in here. And if we don't make a new high, and we can, then what happens to these buyers? We rotate into their stops. And then I have what? Mid, VWAP, and all this kind of stuff. But the VWAP is above the VPOC, so I don't have anything to do over here. I only have right now this. That's all I got. So that's all I need. I don't need anything else. And if it keeps going, because the trend is up, then I don't have a trade. So let's look at what this scenario would be. This is a trade management opportunity. It's not a short. For me, could be for you. Me, not so much. Trend is up. If I get taken out, I get back in the Barca Lounger. This is mean reversion. For me, it's not qualified. And then my next trade is here. That's it. How complicated is that? I know where my trade might show up. I know the condition of the market. North. I know I want to buy counter rotations for continuation trades. If I don't get one, I'm just a tourist. Now, I was going to give you a couple scenarios. One is subject to time frame. This is, or fractal. I don't think, remember, there's no clock here. It's what does it take for the buyers and sellers to make a decision on valuation? Right here in the micro structure. Now, remember, no long for me. I'm just a tourist, and whatever happens, happens. Right here, you see this little node? This is an auction right here. Buyers are there, sellers are here. And I don't know. You see the change in the behavior? The sellers took over here. Yeah, okay. So this is resistance. And where are the buyers? They came in here. They failed here. So I've got sellers here, buyers here. They got run over. Where's my resistance? It's here, here, here. What do I see here? Pressure, skew of the book. What does that suggest? Hasta la vista, thanks for playing. We're going to send you a coupon to the buffet and probably a few cocktails. And now, what's happening? Remember what this was. No good for a long. Where it's poorly auctioned. Down here. Where's my next potential trade? Somewhere out in here. Now, if we see the Acapulco cliff dive, then there's nothing to do. It's just work on your crochet, maybe buff your nails. That's it. Does this make sense? So what I'm doing is anticipating behavior, and I'm remaining disciplined. And the important part of this is to know where your trades will show up. If you don't know where your trades are, then you're playing a video game. You're gambling. And I always say, go to the casino because that's where you go to gamble. Here, this is business. We want to trade or think and build the house, a casino. We want to be playing games with edge, not gambling. The gamblers are, and we all take stops, by the way. But how do you take a stop? Mentally, overhead and cost of production. What do I know? Think like a retail trader. Don't act like one. Where was their stops? Under the swings. Where else do I know? The buyers are here. If I come outside and remember where my outside is and what is potentially too low, I'm looking for reversion trades back here. That's my target. I already know where my target is. What I need to be thinking about is where's my entry. It just makes sense. The thing about hindsight is psychologically, you're going to be giving yourself trash talk. Oh, I shoulda. I was long. I shoulda got out here. Well, you don't know until hindsight. So how can you be responsible for hindsight? But the lunatic under the hood, Hyde, is always criticizing because, I call Hyde's really a moron. Hyde is only knowledgeable in the past. And that's why you look for confirmation and certainty. It's because of Hyde, because Hyde's risk adverse. Hyde has protected our species by avoiding risk. Well, so we come into the business looking to avoid risk. Why not? Except we're in the business of risk. How can you avoid risk when the only way you get paid is taking risk? Kind of a conflict, don't you think? So when you come to this business, at least for me, I got to kind of remind myself that I'm not in Kansas here. I'm kind of I'm now sitting dealing the cards, and what comes out of the deck in the casino is random, and how the gamblers play the cards is random. This is all random. But if I understand how the market works, and I also understand retail trader behavior, I know their stops are here. If I know their stops are here, and I have this, low volume area, and I know in the ETH, this was my retail price and I'm above it, I'm going to be looking here to see if I get a trigger. And yes, I take stops. What are stops? Personal failures, not being right. What is a stop? A stop is overhead and cost of production if I have an edge. That's all it is. Casinos pay the gamblers. I'm outside now, so now I'm looking to see if I get absorption and a buy trigger. If I get it, and this is not a recommendation, remember, I'll come after you with a broomstick if you take this trade. I take stops. We all do. Get over it. This is an area. It's already here, here. Target would be here for scale. Let's just see what it does. I don't know. And it could fail like anything else. Location is here, right? Right there, right there. So if it gets a trigger, there, say Laguerre, or stop. Where's your stop go? Here. Let's see what we get. Now we're watching, right? I've got my microstructure. High volume is right there. If I break above it, I can buy it. If I break below it, we're going south of the border. Microstructure. Just watch. Now my teeth are chattering. How about you? Absorption, microstructure, right here. We're kind of sitting on the edge of the planet, aren't we? Buyers are here. I'm getting some delta. I need my buyers to show up. Absorption, looking for my buyers. This is the area. And this is anticipated. Remember, I'm anticipating to participate. And again, the outcome is random. I got buyers here. I got micro high volume here. And here, I should say here, that's a little VPOC. This is a little LVN. I need to clear this. Let's watch. This is the area. And either it's going to fall down, which it can, or we're going to get our trigger in here. And it's the, I think it's the IB. Okay. So we got to watch. This is very important. The IB is covered up here. I did not see. This isn't the area, really. So let's just see what it does. Looks like now we have, this is very important what happens here. If we fall out, then we're coming back down here. So there's nothing here now. So this is your key location. If you got long in here, you would take a stop. What you need to be doing with this is, remember, the idea of the trigger is to break away and pull back to it. We didn't break away. This looked like it, it's developing. Didn't break. Instead, we're going the other way. So now there is a trade in TraderLab called the IBF. And the IBF is a reversion trade. It comes back to VPON. This. So we'll see what it does. So there's two things here. Outside edge out here for continuation to the HVN. If you don't get the trigger, then we have the IBF, which probably should have labeled this thing because I can't see it. Where's that IB? 21 quarter, I think. I guess it's here. The IB. Is that right, guys? This is the IB 2125. Is that right? Yeah. 50? It's a 2150, 6-1. Let me put this in here. The IB is very important because it's really where we broke out of the first hour, and that typically means there's a higher time frame participant. That's why this is a very important level right here. When you break here, it sets up reversion back here. So I was not aware that the IB was there. And you're below this, you see? And you're below this. So what we've done is we auctioned higher, we fell out, and now this is where we're trying to go. So you have two trades here. You have the long, and then you have the short here, which would put you there. So I didn't see that. So what I tend to do, and I'm not saying it's the best idea, is I just trade from one side primarily. So when this happens, then I have a choice. I can take a short here to there, and I know there's stops at the mid, and the VWAP would be a target because the VPOC is below me. So right here, the IBF is a reversion trade back to this. So you have LVN, which is your outside edge of the upper distribution for a long, this. And if it breaks the other way, you have a short there. And none of these are recommendations. So you have the long continuation or the reversion back. We are trading mean reversion. The reversion comes from a few locations. You can do this outside to the HVN. That's reversion. If you fall out of this distribution, you're now coming back here. That's the IBF, and that's a structured trade in TraderLab. And then you could, do whatever. This is your primary target for the reversion. So again, long to wherever, HVN, or this is the same trade from the opposite direction, or short to there. And then you have a runner or whatever you do. And then if we get below here, then you're going to target this and this. And it's two-sided trade. So two-sided trade, trading balance, we're trading balance areas. So here to here, or this to this to this. It's the same from different directions. So, and again, it's up to you. But they are all reversion trades. Does that make some sense? You see the reversion? And whatever it does, it's just whatever. So the IBF, I wish I'd seen the IB here, which I didn't. But the IB has very nice alignment. The IB is the outside edge for the long. When it breaks under, the IB comes the outside edge against here for the short. You see how they fit together? Now, I can't tell you what it's going to do. It's just part of the thrill. And then this is the target. And you got your liquidity back in here. I front run these things by a couple ticks because who knows? If I get below here, I've got targets below. So again, it's trade management. So let's see what it does. Are you guys tracking? Is this helping a little bit? You getting something out of this? Please give a like. If you have a question, post them. If you're in YouTube, you can use the link in the bottom of YouTube. If you want to visit TraderLab, there's no cost for that. And there's 60 PDFs of structured trades plus the library of webinars that are available to you and all the additional education in the Bookmap server. Stocks, options, crypto, order flow, algorithmic behavior, market maker, behavior, the rest of it. How to use a high tier tool like Bookmap. The idea of the TraderLab is to help traders understand the business they're trying to be in and to deal with their psychological issues. I believe anyone who comes to TraderLab can learn how to trade if they just are patient and they take it in a sequential process. It's a proof of concept. You have to prove to yourself that you can actually become profitable. This is not a business of setups. It's a business of discipline and structured trades. The trade shows up, you show up, you manage your fear, and then you extract. You need to have an edge in a random environment. We don't know, for example, is it going to get here? Well, it might, or it might not. This is the primary target, but I don't put an order out here. What I do is I take it a couple ticks ahead, and if I see a reversal, I can very well just punch out of it and not even think about it. Or and I'm giving you the ors because I don't know the answer for you. A lot of it's going to be psychological. For example, what happens if this is the low of the swing and we come all the way back up here and you get taken out because you don't manage your trade? Emotionally, how does that, how do you deal with that? What happens if you bail out here and then it just counter rotates and goes down and takes the low of the day out? How do you deal with that? What is your plan? Here's the thing about a trade plan. You're not making it up here. You have it all defined what you will do. What this will do is random, right? If the market is 100% random 100% at a time, you cannot be random. You need anchored inputs that you have reverse engineered to know over a large sample size what gives you the yield, not an individual unique event, which these all are. Anything can happen at any time. You could have, great MFE sitting in here and it comes back over here to get taken out. You're going to be a raving lunatic because your mind or hide is going to go, you should have got out there. Well, yeah, right. Well, in the meantime, what should I do? How about follow my plan? That's all. That's all there is. So all of this hindsight stuff, forget it. If you took a long here and you took a stop, if you understood there was the IB over here, you would either take a long, it fails, it's a change, you take a short. It's a short trade. It's a structured trade, and you're going here. That's as complicated as this is. It's if this is too low, then that, then up there, HVN. If it's not, and I fall out, so if this, then that. If not, then what? Then that. That's it. How complicated is that, other than random? How we doing? How you guys doing in YouTube? How about a like? Or better yet, use the link in the bottom of YouTube. Visit the TraderLab. It's not romper room. Remember, this is there's all these influencers. I always talk about this and the holy grail, right? The only indicator you need. Haven't you had enough of that? Remember what the catch-22 is. Everything works randomly. That's what keeps you locked in Trader Groundhog Day. Waking up in the same place because you're trying to fix what might be a defective process. You don't know it's defective because it has random winners. You always think, and I did for years, that all I got to do is make it better, because look, I got winning trades. What do I got to do to make this better? Maybe if I add a filter over here and put a little of this and throw a few pickles on the side of the plate, it's going to be better. It's always the same. It's just random. So if I'm in randomness, then I can't solve to eliminate randomness. I have to solve for randomness. And that's what Edge is about. The only way the casinos are successful is they've solved for randomness. That is, they only play games with an edge, and they also pay the gamblers. Well, we take stops too. For me, I find that the way I approach this is I want the larger rotations. I don't get paid, quote, scalping. That to me is a waste of time because I take stops. So if I take, let's just say I took this, wherever it was, this thing, and I took a stop here. Well, that's my risk. My risk would be here, to there. All right, am I going to shoot myself? No, it's a couple points. What happens here? I have a short. Now I've got it back, you see? And I'm either holding a runner, and again, it's subject to plan, because my stops are going to be, where are they from the other side? Same location. They're going to be out here. And I'm in two-sided trade, but this is the target. And now let's talk trade management. What do I do about this? We're all asking, what do we do about it? It's the plan, not what this does. So where was my buyers? They were here. Where's my sellers? There. I break low. Sellers are below the buyers there. That's resistance. Going to zero. Buyers are here. Sellers are here. Sellers are here. Going to zero. Where's my buyers? They're right there. When this breaks here or breaks here, I could be out of this thing. And what am I going to think? Remember, emotional responses. Should have got out there. Yeah, well, great, good for you. Guess what? If the plan says you wait for a structured reversal, wherever it is, which hasn't happened until here, you'd be out here and you go, oh, I could have. Or your trade plan says this trade doesn't fail until I'm out here. And I'm willing to give all this MFE back to get there. What do you think is the right answer for you? And you got to know the answer before you ask the question. That's what a trade plan is. If I come down here and I get under it, then what do I got? I got this. And I got this. I can do either. I can do both. I can do neither. I can do anything. Part of the joy. And what kind of day is this called? Those of you who are pro in volume profile world, what does the behavior tell us about today? Does anybody know? What kind of day is today? Can you define this? Market profilage, as I call it, which is kind of the basis of what's going on here. And the real basis is auction market theory. In other words, what does the market do? What's too high? What's too low? What's fair? And I'll catch you later. Neutral day. This is a neutral day. What is a neutral day? Both sides are active. Nobody's in control. Currently, it's accepting this area. But what do I know? If I find too high, I can rotate across the range and I can just slosh back and forth. Now, the other piece to this is, in a neutral day, if I accelerate under here, I can get what's called a neutral extreme day. Now, that would be the longs really getting ripped. Can it happen? Yes. Do I anticipate it? It's not my job. It's always maybe. So maybe it'll do this, maybe it'll do that, maybe it'll just sit here and abuse me, maybe it'll get here, maybe I'll get squeezed, maybe my short fails above here, the IB, maybe it'll come back up to the IB and pick the stops. What do I see happening? I see more sellers, I see the skew of the book. Where's my target? It is here. Where would you have gotten out of this trade? Would you still be in the trade? would you be out of the trade? You need the answer before I ask the question or the market presents you with the question. Is that making sense? Neutral day, James. Neutral is when both IBs get taken out. First hour high, first hour low. There's about a 29 to 30% probability we do that. And what it's saying is currently, underline, don't forget, we have CPI tomorrow. That is an input that may cause change in the condition of the market. Now, what does that mean? I don't know. It's either going to go up or it's going to go down. And you're going to say, a blue ribbon for Tom. He knows it's going to go up or down. That's all I know. So I know based on the auction what it might do. I know where it might do it, and I don't know what it will do. So I don't have a job for that. My job is to read the order flow, see what has the market done. What does the market not do? The market did not hold this distribution. What does that tell me? This is too high. If I get back in here, what does it tell me? Reversion. This is mean reversion. So the long was reversion up. The longs outside were reversion up, to reversion, to up, too high, fall out, reversion back. What next? Maybe fall out. We have this. Barely missed it. Where's the sell stops? Under here. Are we going to get there? Don't know. If I take this trade, where's my target? Here. And then this is what they say is the 64-cent question. Is this making sense? So for lot tie, it's a neutral day, not a normal variation day, because we took out both IBs, okay? So both sides are getting abused. The shorts are getting squeezed out, the longs are getting abused. So until it changes, it hasn't. So it's rotational trade. In the TraderLab, I say the first thing you should learn after watching a bunch of these webinars and hanging out and picking a structured trade is to work on mean reversion. Let's talk multiple concepts and time frames. I know time frames. I don't use them, but you guys relate to the clock. Remember, what's going on here is not tied to the clock. It's tied to the participant behavior, so I call it a fractal. Right in here is an auction. Oh, it's on sale. I'm not paying that. See this little node, that little high volume? I'm just going to draw this for you. That's an auction in micro. So I can monitor this thing. I can see that's the volume point of control of this auction. This is the fair price. If I leave it, I'm not paying that. These are the shoppers in the store. If I go up to the next higher, quote, time frame, this is for the day, the highest volume. You'll notice I got liquidity hanging out here. What are these guys doing? Well, there's somebody who wants to get long here. What do I want to do? I want to get out before I get here by 1 or 2 ticks to get my risk off. So I could be short from the IB, and this is a structured trade back to this. Or trade management, and I'm out here. Whatever. This is the TraderLab. Let me show you the TraderLab. The chat, you're all welcome to it. It's a serious professional community. It's not romper room. Just want you to know there's a lot going on in here. Structured trades. Posts, screenshots, and the TraderLab process is auction market theory using the volume profile as a chassis for traders to develop structured trades and a trade plan. The business is not a game. This is not gambling unless you want to gamble. That's up to you. Here's the library of webinars. You definitely ought to be taking a look at this. This is the one I did on Friday. Holy grail of trading, how close can you get? What do you think? I don't know. Day trading, fantasy versus reality. Stop gambling, start winning. There's a lot here and a library of not only the webinars, but documents you can download, things I created over the years. A lot of information, and the TraderLab community. And Ned, thanks for curating this. Keeps it organized for us. Appreciate that tremendously. And everybody ought to give Ned a hug in TraderLab. If you're interested in TraderLab, use the link in the bottom of YouTube. There is no cost for it. It's open to everybody. The only requirement is that you're serious about the business of trading And there's loads of influencers out there, and the holy grail of trading is, the only one thing you need. If that appeals to you, then that is FOMO, and that is just feeding your desire and motivation for profit, which is hide the lunatic under the hood. The business of trading is intentional processes in a random environment. And if you're interested in understanding the business you're trying to be in, visit the TraderLab. There's no cost. You do have to confirm your Discord user name to make sure you're not spam-a-later. Thanks again, guys. Don't forget to like on the way out. Appreciate you visiting the TraderLab, and I look forward to seeing you tomorrow. Take care, and thanks for spending some time with me in the TraderLab today.